I'm sitting here today with Rebecca Hunter. She is the co-founder of The Loaded Pig. And today we're going to be talking about how to improve your credit score by 100 points in 30 days. Rebecca, thanks so much for joining us.
Thanks for having me, Rick.
You bet. So where are you in this world?
I'm in South Florida. I'm near Boca Raton, actually.
Oh, very nice. And things are going well there?
Yeah, things are great here.
Excellent.
Everything's going well. What
I'm
about you?
jealous. I'm jealous of your weather.
We've had a nice week, but usually it's like already in the 90s right now.
I see. I see. So tell me, what is the Loaded Pig? I guess it's a blog.
Yeah, definitely. So my boyfriend and I started a Loaded Pig about a year ago now. And it was actually after we had purchased a house together with a mortgage and really had spent a lot of time learning about the home buying process. And before this, we had really been interested in personal finance for a few years. So we were always learning about improving our credit and budgeting, stuff like that. So we just felt like we had enough knowledge that we had built up over the past few years to really help other people achieve their financial goals.
Interesting. I mean, it sounds like a good reason to start the blog. So, did you start the whole process, before you bought the house? Did you think about increasing your credit score, or was it below a certain threshold, and you just thought you had to raise it, 100 points or 200 points or something like that? Tell me about that whole process.
Yeah, so my first job out of college was managing a credit card site. So I had to learn a lot about personal credit, really from nothing. I had no idea about it because in our education system, we don't teach anything about personal finance.
No.
So I had to write all of these articles that I didn't know anything about. So I learned at a pretty young age, how to manage credit cards responsibly and kind of just everything about the factors of a credit score. So I had always been paying off my credit cards in full every month and making on-time payments. So I actually had a pretty high credit score. So I didn't have to say like, oh, I need to raise my credit score, by this certain date. But we were always very mindful of our credit. So that just helped us, maybe 10 years of just managing our credit well. And then we really were able to get a great interest rate on our house.
I think I mean, you're very fortunate to have been able to get that job where you were learning about, about credit scores and that sort of thing. In my own case, as I wrote in my own book, I was always good at earning money, but saving it and spending it, terrible. In fact, when I was 18, I got a credit card, and it had a $5,000 limit on it. And I had no idea.
That's really high.
And I'm talking about like 20, gosh, I don't want to date myself, but a long time ago. And
Yeah.
But I mean, there was no instructions that I was ever given to tell me, I actually have to pay all of this money back. Or more importantly, the minimum payment isn't actually what I need to pay.
Yes.
I need to pay all of it so I don't pay any interest.
Yeah, and credit cards have very high interest rates. Some of them are up to like 30%. Yeah. So people see their bill and they're like, oh, it's a $20 minimum payment. Great. And they don't realize how much interest they're racking up until they check their credit score and it's very low. So it's definitely important to learn about managing a credit card before you get one.
In terms of credit scores, 65% of it is, the utilization and the payment history. I was going to say length of credit, but that's actually something else. It's incredible. If somebody wants to raise their credit score 100 points, all they're going to need to do is look at those two things.
Yep, exactly.
And I found, interestingly, when I was when I had credit cards, or when I was having trouble with credit cards, what I was doing was I was getting credit limit increases because they would do them. They would do them for me. I would just call the bank. They said, oh, this guy's making his payments on time. There's no problem. We'll give him whatever he wants. Well, within reason. Yep. Today, I learned that if you increase your credit scores, it decreases your utilization. And that means your credit score goes up. So that's one way that somebody could potentially raise their credit score.
Yeah, definitely. And that's a way that I've always done it. The trick is that you can't increase how much you're spending.
Yeah.
So you're not supposed to max out your credit after you get a credit limit increase.
Yeah.
And that's something that people are like, oh, I have $5,000 more in credit limit. I can, go, put my tuition on it and this and that. And that's definitely not what you want to be doing. Yeah. What I always did is if I had like 6 months to a year of payment history, I would call and get a credit limit increase, but I wouldn't change any of my spending habits. And that would really help with the credit utilization ratio because my limit would keep going up and my spending would be the same.
I think that's excellent advice. It's kind of like getting a bonus from work, like a Christmas bonus or you get a raise or something like that. I know that I always, I found myself getting a better car or moved into a better rental or something like that.
Yeah, lifestyle inflation.
Sure, exactly. But, these are the sorts of things that we have to, keep everything the same, keep everything at the same, keep doing what you're doing. And as you get better as your credit score increases, as you earn more money, save more money and all of that sort of stuff, everything just works out better. Everything just gets better with that over time.
Yeah, definitely. And sometimes it takes time, raising your credit in 30 days is definitely possible, but it really does take time to really, move your credit, a few hundred points because payment history is 35% of the FICO score. So it's so important.
Absolutely. So payment history, I mean, that's just time that fixes that. And if there's any late payments, more than 30 days or something like that, it's going to take some time to come off. But exactly. And I would recommend it, I think, because if your credit score is very low and you apply for a mortgage, you end up paying a lot of interest, a lot more than you have to.
Yeah, definitely. It makes a really big difference with the interest rate. And even if your credit score is low enough, you might not get approved for a mortgage. So it's definitely something to think about and monitor your credit like 2 to 3 years out, just so that oh, I have to do X, Y, Z to be able to get to around this range. And then I could get, a good interest rate.
Sure. It's staggering actually, because people, they might see a posted rate for a super prime member or borrower being, let's say 2%. But if you're not in that super prime, in that 800 plus credit score category, maybe you're going to pay 1% more. And somebody might, I can forgive them for saying, oh, it's only 1% more. Like, who cares? Right. But if you amortize that over 30 years, that 1% could be $100,000 or more.
Definitely. Yep. It makes a really big difference. And then it comes down to like paying points to lower the interest rate. And at that point, many people just wish that they had taken some more time to improve their credit instead of spending, a few $1,000s at closing.
Talk to me further about this paying for reducing the points.
Yeah. So when you're in the mortgage process, when you're agreeing on the interest rate with the lender, you can actually say, I will pay a certain amount of money and they will lower the interest rate. I don't know the exact amount, and it may depend on the lender. I'm not sure. But for us, when we got to that point, we already had such a good interest rate that we didn't have to pay anything because we were happy with the interest rate we got. Of course, this was before all of the interest rates like really went low recently, but we weren't going to refinance a year after our paying closing costs. So, but yeah, it's kind of a trade-off. It's like, do you want to spend an extra year improving your credit, or do you want to pay, a few $1,000s to lower your interest rate on a mortgage?
Tough question. I know that my emotional self would be, I just want to buy it now because I will start looking at properties and then I'll be like, that's the one I want.
Yep, definitely.
Even if I pay a little more, I know. But today I'm a lot more, how would I say it? Disciplined. But old me, And it's interesting, I just learned about this stuff. I just learned about personal finance online, kind of like what we're doing right now, having discussions.
Exactly.
And I've been having discussions with people. I started learning it in around 2014, so 6 years ago.
Yeah, nice.
And it's just the internet, right? That allows us to do that. So it's quite encouraging, and I'm happy that we all as a group can get the word out. Now, tell me, what are other pieces of advice that you might give somebody who wants to improve their credit score, at least in the next 30 days or so?
So the main point that I would say, which does take some effort, is to check all 3 of your credit reports, which is free to do once a year, and to really look through it to comb through it very finely and see if there's any errors on it. So there might be an account that really isn't yours, or a late payment that really wasn't late. But if you go through it, you can actually dispute any errors with each bureau. And I forget the exact rule right now, but there's a certain amount of time that they have to at least say, yes, this is an error, we'll fix it, or no, it stays. I think it's around a month or a little bit below, less than a month. But basically, if there's something that's lowering your credit score and you're able to get that removed, then your credit is going to go up. So that's a really great thing. Like personally, I had an account that wasn't mine, somehow got on my credit, and I was able to take it off. And then my credit score went up just because I fixed something that shouldn't have been on in the first place. So that's definitely a great way to do something quickly. Of course, it does take, a little bit of time to contact each bureau. So it's not the easiest thing to do. But the trap that a lot of people fall into is like paying a credit repair company to fix an error like this. And they're going to do the exact same process, and you can just do it yourself and save, $300.
You're absolutely right. I mean, and in fact, I know that TransUnion even allows you a way to do it online.
Yep.
So I'm not sure about the other ones, but
I think that they all allow you to do it online. And I think TransUnion is the one that I went through recently when I was writing an article, and they have like a dispute center, and it's actually very easy to use. Mm-hmm. So you can see like the status, and like you'll get updates. So theirs is very user friendly. And then of course they have like mail options and stuff like that, but that's going to take longer.
That'll take longer. Now, do you recommend people to use applications like Credit Karma or any of these sort of free credit check sites?
Yeah. So Credit Karma is interesting. I'm a fan of it. I've used it probably for 7 or 8 years now. The only caveat is that most lenders, I think that the figure is about 90% of top lenders use the FICO score, and Vantage score is what is used for Credit Karma. So I was getting an auto loan once, and I had my Credit Karma opened, and my FICO score was like 50 points lower. And I was like, but it's right here. And I didn't realize at the time that it wasn't the same thing. So what I really use Credit Karma for is the monitoring. So like I'll get an email every time there's a new account put on my credit report, or I pay off an account. Like it gives you alerts like that, so that you don't go to get a loan or a credit card and realize like, oh, there's this account that I didn't put on my credit, and I need to take care of that before, I apply for something. So they do have nice tools like that. And of course, if you know that the lender uses Vantage score, then it's great to use. But otherwise there are other ways to check your FICO score.
Such as?
Experian is a free way. So I have an Experian account, and they show you, I don't think it's the most up-to-date FICO score. So they show you one of the FICO scores, and then they'll show you your report. And then I also check my FICO score through Wells Fargo. So a lot of banks now are offering the most up-to-date FICO score, the scoring model that's most widely used now. One time I did actually check 3 different FICO scores and 2 different Vantage scores, and they were all different. So it really depends on like what the lender's using, but you get a good idea from the free tools.
Yeah, I think that makes a lot of sense. I've even noticed that, even just speaking with TransUnion, my bank, I have Scotiabank in Canada, and they have the TransUnion score, and Credit Karma has the TransUnion score. And what's really funny is that sometimes they don't match. And the reason is because my bank only pulls it once a month, whereas Credit Karma pulls it, I think it's once a week or something like that, or every time I log in, who knows?
Yeah. But, and I found with my Wells Fargo that they pull it once a month. So I tried to I really like following my credit score. So it's a little geeky, but I
check mine out weekly, or even more than that, all the time.
Yeah. I check mine out monthly because I get the email from Wells Fargo.
Okay.
But you can see what day of the month they pull it. So then I pay off all my credit cards 2 days before, even though it's 2 weeks before the due date. I'm like, okay, I need to pay them off. I need to lower my credit utilization. So,
well, that is an interesting thing you say. I found that I figured out that the amounts on the credit report. So let's say on my Visa card, let's say the bill was $3,000, for instance. I found that the amount that was displayed on the credit report was the amount that was invoiced to me on my last statement. I figured that if I paid off my statement in full, or if I paid off the balance before the statement came out, then my statement would have a balance of 0.
Right.
And I would have expected my credit score to go up. But guess what?
Yeah.
It doesn't. Did you know that if you have truly 0 utilization, it negatively impacts your credit score?
I didn't know that, but I guess because of how my due dates line up, every time I check Credit Karma, it says I have a 10% or 8% credit utilization. So I guess for me, it never is.
Right.
Yeah. It's never exactly 0, but that's interesting. I'll have to look into that.
Yeah. I actually went to 0 one day. I had zeros right across the board, and my score dropped 15 or 20 points or something like that. I mean, it wasn't a big deal.
Yeah.
I don't apply for lending very often. It's just not something I need anymore. But I still, for me, it's a game. I want to, try and figure. I too want the best possible or the highest possible credit score, and crack the system or figure it out.
Yeah.
Well, we'll see what happens.
Yeah.
Now, do you and your boyfriend compare credit scores, or do you have a challenge between yourselves?
Yeah, we do sometimes. And yesterday we actually both checked Wells Fargo, and he had the exact same credit score, which has never happened before. And I was like, maybe something happened that it's off, but I think it's just a coincidence.
You're like, no, it is a mistake.
Yeah. I was like, I'm pretty sure mine is higher, but I don't know. But it's interesting that you said about some things that change your credit score don't really make sense, to a consumer's point of view. Mm-hmm. And I experienced that when I paid off my student loans. Mm-hmm. So I had 4 accounts of student loans, one for each year, and my credit score tanked. I think it was almost 100 points because I only had 1 credit card, and that was my only line of credit. And so I had now 4 closed accounts. And obviously, credit scores, the point of them is to show lenders your credit worthiness, mm-hmm. to show them that, we're going to get our money back if we give them money. But you should be kind of rewarded for paying off your loans. So I was like, what is this? My credit just dropped. So of course it took some time, to get it back up from there. But at first I was like, this doesn't make any sense. What am I supposed to do? Have loans open forever?
I totally get it. And when I started learning about credit scores, I discovered that the credit bureaus, they don't care how much money you have saved.
Yep.
So what about for all these people who are saving their money, who have no debt, who don't need credit. And then all of a sudden they need to either buy a car or they buy a home, and they're penalized because
exactly.
How crazy is that?
It is crazy. Yeah. So for those people who really they can pay in cash for everything, probably the best thing to do is just open a credit card and put like Netflix on it.
Sure.
And then set up an auto payment. This is actually one of my tips, is to set up an automatic payment for either the minimum balance. That's what I do. And then I pay my credit card in full every month. Or if you just put Netflix on it, if it's just to raise your credit, then just set up an auto payment for the full amount. And then you really don't have to think about it. So at least it keeps it open. And then you're paying it off every month. Because if you don't use your credit and then you end up having to get a loan or get a credit card, you are definitely penalized.
Go figure.
Yeah, it doesn't make too much sense. I agree.
No. By the way, Rebecca, do you have any resources on the Loaded Pig on how to raise your credit score?
Yeah, definitely. So I have an article called 5 Easy Tips to Raise Your Credit Score. And it really talks about starting with the FICO factors, tips that really relate to, the main factors, payment history and credit utilization, that can help you increase your credit score really with very little effort. Setting up easy automatic payments, stuff like that. And then kind of just changing your behavior to manage your credit more responsibly.
That's great. We'll go ahead and put the links in the description below so everyone can go ahead and learn more about raising their credit score.
Perfect. Thank you.
Great. Well, do you have anything more to add? I think we've covered quite a lot today.
Yeah, I think the only thing I would add is that if you are trying to raise your credit quickly, and if you do have a credit card, one of the things that you can do is really treat it like a debit card. So actually make early payments. And and one of the big things is don't spend more than you can actually afford to pay off every month. But another thing is, if you put a few $100s on it, you can just go pay it off early before the due date. And that'll help your credit utilization a lot, especially if you're unsure of the date that your credit score is being calculated to see, if you've already paid it or not. And of course, making on-time payments is so important. So set up automatic payments, calendar reminders, anything that can help you out to remember, I need to make this payment. I've even seen people put a sticker on their credit card that says, do you really need to make this purchase? So that, you're going to Starbucks and you see it and you're like, oh crap, no, I don't need to make this payment. Sure. I don't need to purchase this $7 latte. I can go without it.
Sure. Makes perfect sense. Rebecca Hunter, this has been a lot of fun. Thank you so much for joining me today.
Thanks, Rick. It was great.
You bet. Bye-bye.
Bye.